Ladies and gentlemen, please welcome my good friend Keith Fitz-Gerald, principal of the Fitz-Gerald Group. Keith, it is a pleasure to have you with me today.
Thank you so much for having me back. This is going to be fun.
It is, and you look pretty good. Let me just tell you that. So tell me, talk to me about the heroes and zeros. Explain to the audience what you mean by that.
Sure. Heroes and zeros is an expression we use particularly this earnings season. Any company that comes out and beats or matches expectations and has prudent guidance is going to be a hero, and the stock market's going to treat them really, really well.
Correct.
Companies that miss or companies that are arrogant, to your point about Goldman Sachs, are going to get pummeled. There will be no in between. And investors have simply got to understand this because the rules of money are changing.
Right. But, Keith, tell me, do you agree? Had Goldman Sachs come out ahead of time last week or the week before and announced that, they were going to have a little bit of trouble, it wasn't going to be what investors thought, stock would have gotten punished. It would have gotten punished. But I don't think it would have gotten punished the way it's getting punished today because everyone was completely surprised. Do you agree?
Oh, 100%. This is like when you're 5 years old and your mom says, I'm going to take the Band-Aid off now. And she does it before you're ready. Now, all of a sudden, it doesn't hurt so much.
Right.
So to me, yeah, pre-announcing is not the way we did it when you and I came into this business, but it's certainly a prudent tactic now.
Right. But look what's happening because they didn't pre-announce. They missed it. All the other banks actually reported pretty well, right? Their numbers were beating the estimates. Now, Goldman Sachs comes out, surprises everyone, and it drags not only Goldman lower, but now it's kind of got that negative tone. So it's dragging the whole market lower. While some of the other names, Morgan Stanley, in fact, did all right? They didn't disappoint.
Yep.
And so it's a very interesting dynamic. And quite honestly, I got to tell you, I'm actually surprised that Goldman chose to do it the way they did. I would have thought, knowing what they knew, that they didn't choose to pre-announce.
Well, it's interesting. I'll respectfully push back on that one. I am not surprised that they didn't pre-announce because they think they're above it all. And the history of their management suggests that. So I think they threw the chips into the wind and, things being what it is, there's probably somebody trading against that information.
Well, isn't that interesting? Now, tell me what you think now, because now we're just at the beginning of the beauty pageant. So there's lots of numbers coming out this week, Netflix, Procter & Gamble, and then as we move through the weeks ahead, tell me what you think. What's this earnings season going to look like for you?
Number one, I think that earnings are actually going to be stronger than people expect. The end of financial universe as we know it is not here. It's all about the Fed. So companies that can put good numbers up, and there are still plenty that can, are going to do very, very well. So I'm looking to buy. I'm looking to be consistent. I want to stick to my plan and do it well.
Okay, so you and I'm in your camp with that completely because I think you need to be in it to win it. But let me ask you a question. Are you concerned at all, or are you not concerned? But I guess the fact that the bar's been lowered, right? Because they brought these estimates down, so the bar's been lowered. So it's got to be relatively, or it should be, easier for these companies to beat those estimates.
Well, I guess that depends on the definition of the word easy, right? I mean, this business is never easy, but I think that there's a space for people who are prudent. And so the best CEOs and the best C-suites understand this ball game. They know how to manage through this. And importantly, Kenny, it's something you and I talk about many, many times over. They are already planning for the other side of this mess. So in contrast to businesses that are going to come up with the dog ate my homework, the best companies are already looking ahead saying, we're going to be buying this, we're going to be doing that, we're going to be expanding this. I mean, capital expenditures, for example, continue to climb. So companies are investing in themselves at a record pace, which is a sign of strength, not weakness. Right.
That is a sign of strength that I will say to you. And so like you got to be in the game. You got to be in it to win it, right? These people that, sell everything and try to time the markets, the tops and the bottoms, they end up always falling behind because if you stay involved and you take advantage and you take the names that you like, even if they're under pressure, that's when you take the opportunity to add to those names because they're just on sale.
Absolutely. There's that old famous saying, you buy when there's blood in the streets. I think it's Lord Rothschild that's attributed to which I usually add, even if it's your own. You may not like it. It may be scary. But the fact of the matter is, if you're trading in the best names, then the odds are on your side.
Right. And there you go. It's about the quality names that you have in your portfolio. And in an environment like this, it's all about a well-diversified quality portfolio. Keith, thanks so much. I love doing this with you. I want to do it more. So I hope Scott takes more vacations.
Absolutely. Thank you so much. Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.